From an economic perspective, we expect that this autumn season will be a very interesting period and maybe even an exciting period. Obviously, the global economy is still very much determined by the COVID-19 virus. And obviously, we have seen that the second quarter in particular was hit severely by this COVID crisis. If you look at growth in the second quarter, it went down quite substantially in all major economies. For example, in the euro area, there was an economic contraction of 11.8%, an unprecedented figure. A similar figure we see for the US, minus 9%. In other words, these are things that never happened before. One of the worst victims of the corona crisis so far has been the United Kingdom, with a growth contraction of more than 20% in the second quarter. And in general, we see that across Europe there are quite some differences in the economic performance of countries. For example, Germany has been doing quite well, and German and in general Nordic countries actually, were the strongholds of the European economy, whereas in the south of Europe the situation was much more dramatic. In particular, the Spanish economy underperformed enormously. Now, against the background of this very weak second quarter, what we are currently observing in the economic data is actually improvement, recovery. In general, we expect that the second half of 2020 will become an entire period of recovery, economic progress, and that's something we see already in high-frequency data. For example, if you look at the retail trade, we clearly see that consumers are spending again. And obviously that is supported by the policy initiatives taken by governments, because governments, for example, installed temporary unemployment schemes, and that allowed people to continue their consumption. And that's, of course, good news for the economy. If you look at the supply side of the economy, also there we see things improving again. For example, industrial production is growing again, but nevertheless we see that things are going much more gradual there, because in general we see that industrial production is still around 90% of their pre-corona production levels. So therefore there's still a long way to go. And in particular, what we are mostly worried about is the export performance. We see that exports are lagging in the recovery, and obviously that has to do with different and difficult international circumstances. So therefore, there's still a long way to go, but generally speaking, we are optimistic about the near future, because we will face very strong recovery and fantastic growth figures as a consequence. Nevertheless, there will be some economic indicators that will worsen in the months to come. In particular, if we think about unemployment figures, especially if we look at the European labor markets. In the United States, we see that unemployment figures came down again after the enormous and dramatic increase during the corona crisis. In China, we see that the labor market is stabilizing again, but in Europe, the damage to the labor market still has to come. And we see unemployment rates climbing in all European countries, and we expect that this climbing trend will be continued for the rest of 2020. Now, generally speaking, of course, this is a pretty good environment where we see that we can be cautiously optimistic about the future. But there are a couple of, maybe some things on our recovery path that may disturb the recovery. And first of all, of course, we think of Brexit in the European context. Brexit is back. It's back on the agenda because Boris Johnson is playing a very tough game. He's threatening to blow up all the negotiations, and that may lead ultimately to a hard Brexit at the end of the year. Nevertheless, we are quite confident that ultimately the United Kingdom and the European Union will be able to reach a deal, to reach an agreement, so to establish a long-standing relationship between the European Union and the United Kingdom. But of course, there is a risk that something goes wrong in this political process, so that's something we have to take into account. Apart from Brexit, you have the US presidential elections. The US presidential elections normally don't matter so much for the global economy, but today it might be different. And it's hard to predict, of course, who is going to win the elections, Donald Trump or Joe Biden. But what we see today is that some people are contesting the results. And if you are contesting results, that might lead to maybe political discussions, maybe even social unrest. And therefore, we consider the US presidential elections today as a risk factor. And then, of course, you have several geopolitical conflicts in the world that may disturb the economic recovery. Think of the conflict between Greece and Turkey, a new factor. There are still the tensions between China and the US, and it's quite clear that these tensions will be continued for a while. But ultimately, the main risk factor today is COVID-19 itself. The virus is still around. The virus is still determining the global economy. Namely, if the number of cases is going up, ultimately some governments may decide to reintroduce lockdowns. Now, a lockdown had a tremendously negative effect on the global economy. Well, if many countries will return to a lockdown situation, then obviously there will be new economic damage. And that's something that hopefully we can avoid. Unfortunately, we see it happening in some countries. Think of Israel. We see that the situation in countries like Spain and France is becoming quite dramatic again. So this is the major risk to the economic outlook today. To summarize, in general, we can say that this autumn season will become very interesting. In general, we will be in a period of strong economic recovery with the remarkable growth figures that we expect that will be on the agenda. But at the same time, there are several risk factors that may make this a rather exciting and maybe even turbulent period.